The S&P 500 narrowly in positive territory for the year. Let's get perspective from Kyle Taylor, wealth advisor and portfolio manager at TriDelta Private Wealth. It's great to see you.
Thank you.
The current environment, you say, is a little reminiscent of 2018 during Trump's first term. Yeah. He announced tariffs, the markets tanked, but then recovered.
Yeah, during any period of volatility, we like to look back on history to give us any kind of perspective on what we can anticipate to see moving forward. And 2018 is an important reminder for us because in just the late second half of 2018, when Trump first initiated his trade war on China, and people forget that markets sold off almost 20% in a very short window. And it serves as a good reminder today. Obviously, the scope and the magnitude of the trade war is a lot different in 2025, but it serves a reminder and a lesson that you can't expect to be invested for the best days if you're not willing to be invested for the worst days.
But we should remember, you say, that tariffs tend to be sticky. For example, Biden stuck with a lot of the measures, Buy America, et cetera, that Trump had introduced.
Yeah, interestingly, Biden actually added tariffs onto China during his term, in addition to the Trump tariffs of his first term. So these tariffs tend to be sticky. In 2025, we do think we'll see compromises, like we've already seen with UK and the 90-day pause with China, which is generally good news. But we should expect to see that baseline tariff level continue, and companies and investors will need to adapt to that.
And of course, there's that fear that companies will just defer investment spending, building new plants, et cetera, until they know where they stand.
Well, that's the thing, is businesses and consumers want certainty and clarity on trade policy in order to make long-term investment decisions. And that's really important for them. And that's something that the market is looking forward to with these trade deals, and any signal from Trump or Treasury Secretary Scott Bessent.
And Peter Navarro, the noted trade hawk, are they going to try to keep him under control?
Well, what I think is important to remember is tariffs are widely unpopular among American voters, and it's something that you can see at the grocery store, you can see in rising prices. And we are optimistic because there is a 2026 U.S. midterm election quickly approaching next year, and Republicans don't necessarily want to hang their hat on this issue. They want to pivot towards some wins, whether that's announcing compromises in trade deals internationally, or the tax bill that they've been campaigning on since before Trump was elected. I think we'll see a pivot before the end of the year.
And a watering down of the tariffs.
I hope so.
Or at least stability on that
yes.
front. Yeah. You have some stock ideas, Bristol Myers, BMY. Yeah. Remind us what they do. Tell us why you like them.
So Bristol Myers is a global pharmaceutical company, and they're US-based. They're very topical, and one of the reasons why I wanted to talk about them today is because on Monday, Trump announced an executive order aiming to bring down drug prices for U.S. consumers. And why that's important is, if you look at the executive order, there's a 30-day negotiation period between pharma and the U.S. government. And the way it's worded leaves me to believe that there is significant room for negotiation between pharma and the U.S. government. Can prices come down? Yes, certainly. But they may also rise internationally to equalize payments, as Trump has mentioned. And it provides an opportunity for us as investors, given we don't think the worst case scenario it should be the base case for Bristol Myers. They are trading at a 7 times forward earnings, which you would have to go back to the extremes of COVID to see anything like that. So it's a very rare occurrence. And on top of that, they're yielding over 5% at current prices. And important to us is we've seen significant insider buying activity. So that leads us to believe that we're not the only ones who see value there.
Shift4 Payments, FOUR in New York. What do they do? Why do you think this stock holds promise?
Shift4 Payments is a global payment solutions company. So they have been around since 1999. They're, as I mentioned, US-based, but global in nature. And they process over 5 billion transactions annually. They are an interesting story because they are expected to grow earnings over 20% this year and next. They had a fantastic first quarter earnings reports. And they're one of the few companies that you can probably point to that actually raised their forward guidance into the remainder of the year. And interestingly, if you were to point and say, they are maybe a little bit less optimistic because there might be a recession, people are spending less, they actually have a history of increasing payment volumes during economic downturns. So we think that they have a quality management team, they're still attractively valued, and we see an opportunity in the shares.
And what's their target market in the payment space?
Vendors, customers, they they act as an intermediary for Visa, for other payments providers to capitalize on.
And finally, Maple Leaf Foods, the meat giant.
Yeah, bringing it home, Maple Leaf is a consumer packaged meats and agribusiness. Their primary markets are Canada, the US, Japan, and China. Now, they were hit a little bit in the first quarter because China announced a pork tariff of 25%, still paled in comparison to the 125% tariff that was enacted on the US. But we think that they're very attractive today. They're expected to grow earnings 100% in 2025, 17% in 2026, 3.5% yield today, trading at 15 times forward earnings, so at a historic low. And they're actually a good example of a beneficiary of that buy Canadian push that we've seen among, if you just walk into a grocery store. And we think that they have some important tailwinds for them around improving conditions for pork, improving free cash flows. And they've enacted several capital projects over the last several years that are starting to bear fruit and helping them improve margins and bring down operation costs.
And it looks like they've got a special meeting, shareholders, on June 11th to approve this spin-off of the pork business.
Yeah, the Canada Packers segment of the business. And we think that'll help realize value for shareholders and for the business, not just Maple Leaf, but also for Canada Packers.
Kyle, thank you very much indeed.
Thank you.
And that's Kyle Taylor of TriDelta Private Wealth.